marks in there. So here we are in OR. We've seen the OR5 in UDOW, the opening range in the turning points, the first two turning points of the RL10. So I like to mark those off as sort of a support and resistance channel. And then I just like to know where the VWAP was in that opening salvo. Yeah, I just noticed I hadn't hit the recording button. So just as a quick recap, so I don't forget to do it later. This one was pretty easy. Today was the tightest range of the last 30 days, finished at the top of the trading range, a positive close, failure to fail, pushed to a new 10 and 30-day high. It's within spitting distance of the long-term fair value. It voted completely north of the dragon, so everything was favorable today. We are still in the summer for MACD histogram, and this looks to me like a strong case for the start of a third day up. In the sectors, the big winners today, the S&P was at 1.44. The big winners today were in the materials like Nucor Steel, Cliff, and U.S. Steel, XLB. The Russell was huge at plus 4%. The triple Russell was up 12%. Inverse oil dominated, and because oil got smashed. Now, worse than the S&P, EFA, Caterpillar, McDonald's. Technology was a disappointment today. Apple, Boeing, Google, Walmart, Facebook, Amazon. So all those that you would have expected to have done well today were not there, and it was really materials plus lumber and real estate. So kind of an anomaly of a day. All right, so back to the UDOW. So this box is our OR5. That box is our OR based on the 10-period regression line, peak and valley. So here we go. It was a big gap up today, so I like buying right inside the elbow of that river and the dragon right in there, okay? So what I'm going to do on this is set up my risk like this. So from the PSAR to the open, that box represents my risk, okay? So we draw that across. That's what my risk is going to look like. And I'm taking it down. I don't mind if you go all the way to the PSAR. I don't mind if you take it just to the belly of the dragon. I would tell you that even if you use the PSAR as the risk, if it fell through the belly of the dragon, that's go ahead and get out. So I'm going to show this just as the belly of the dragon is my risk. I'm not opposed to that, okay? But I would accept a PSAR, and in that case, it also relates back to the belly of the RL10. So that's just the difference between the belly of the 10 and the belly of the dragon. So I like the tighter stop myself. Now, if it gets above this this blue line, that's essentially where I want to be looking to add my second position, right? So if this thing can keep moving and get through this blue line, then I feel like I'm free and clear. And then I have a second, I should be able to get a second position in here somewhere. I'm also eyeballing the Z2 excursion where it rolled over and the Z3 rollover. Those are going to be price levels that if this can get past there, then that will be an exceptional move on the intraday basis. Now we know that UDOW has about an $11 range stat, so this thing could get to 60 or 62 if this was a runaway up move. It finally gets through. It did hold support down here at the Bollinger Band mean. I consider that a sloppy play on my part. I would be satisfied with an exit here. If you take the exit here, then your reentry has got to be right there on the next PSAR flip. So take your pick. I think better practice. I would be more satisfied with my performance today if I had done the exit and then the reentry. And then I can still get a second position in here. So that nets out to about no difference. But I was not penalized for my sloppiness here. So I give that about a C minus. Anyway, second entry in. I guess I should say do as I say, not as I do. I'm trying to give you the better practice. This is me self-coaching too, by the way. I should be better knowing that I'm going to brief it to you. Okay, so by this time, if we started off with our stop here or our stop there, by the time we get up above the hump of this RL10, our stop should have moved at least to here, and then when it breaks through this the hump of that RL10, I don't mind your entry or your exit being about here. And now by this time, we should have just nudged it above our entry because of this this little bit of a retracement here. So we want to lock in that second position. And pretty good exit this time. So the exit on the second position was better. Now what I'm looking for is, I don't mind if you take this this reentry here. If you do, you've got to take that exit. I think. But if you take this exit, then you've got to re-enter once more when the RL10 holds position and crosses. So we got our second position in, or I mean, a second trade has started, one position in. By this time, our stop, which should have been right about here, below the belly of the dragon, now has to be locked in. And now by this time, I should be thinking about a second position long on this. So I'm going to put my stop right about there. Pretty good exit. Very good re-entry. This time, now that we're a little bit later in the day, I want to see confirmation that it's making it through. God damn it. I want to see that it's getting through this RL10 right here. So when I make this entry there, my stop is going to be the PSAR. Reasonable one leg trade there. So now if I look at this on the basis of legs, I might take this whole cluster as leg one, leg two, and this is leg three. And now that we're getting close to lunch, that's why I probably didn't get a second position in. I had some other trades going on, but of all the legs up, this is the best one, and that's when I didn't get two legs in. So that's going to be a span of control issue for me because I had other things going on. Oops. I'm trying this one short as an owl. Good cover. Reverses long for the RLXD and basically scratches. So I give myself about a C, probably C minus on that trade in terms of error-free execution. Not that good. I mean, good trade, but good results, but not very good technique. A little bit sloppy. All right, so now we are in. This is Simon Property Group. Let me get some indicators drawn here. So once again, from the open, the opening range 5 is like right about here. Here's the hump, and there's the belly of the RL10. And so that looks like the minimum manageable risk box to me, right in here. So now any breakout above that blue line looks favorable. Any breakdown below the Bollinger Band mean down in here, like below this blue box, the low of the day, would be a short, because here's where it opened. Okay, it's now broken out above the RL10. So I think of that as an emerging dragon. I wouldn't be offended if you took this entry. In this case, I don't have a strong conviction about Simon Property Group, so I'm waiting for a little more confirmation on the RL10 breakout. So my entry is here. My stop is down here. Oh, excuse me. Stop is down here at the PSAR. Let me get a stop line drawn here. So that's where my stop needs to be. By this time in the trade, I've got another 5 minutes in, and it's given me a nice move out of the low, out of this congestion zone. So I've got to probably have my stop up to about here. So I've locked in no lose plus dinner for 2. Now the trailing stop I was just trailing it with this MMRB. So that trailing stop is never hit all day, it turns out. That blue box is the opening range 60. So in the same way that I use the OR5 to find out the size of that first tactical range, the OR60 is a way that you might approach this. Like if you were doing fast swing trading with 60-minute bars, or hourly bars, then and you're waiting for that first hourly candle to form. That's what that blue box represents, the OR60. So now I just draw a line across from that the top of that blue box, the OR60, and then that's going to be, like a support level today. If price stays above that, it's going to be a really favorable day, and then this should act as the first layer of support for the whole day. Trailing stop still in place. It comes into a Z3P. Now I want you to notice this is actually a super pinch. Why? Because the Z3 lines have compressed to less than a frog box. And now look, let's count the RL lines that are inside those Z3 lines. The 10, the 30, the 90 in the green, and then the purple, this 270. So they're all inside of this very tight compression on the Z3 lines. That is a super pinch, and you get a breakout from a super pinch. That's nothing but good news right there. Get another, basically this is a money management entry. I've got 3 positions in, all well in the money. So like if my risk is this black box, I've got probably 1, 2, 3, 4 R from the first one, probably 2 from the second one, and 1 from the third. So this is probably an entry with 7 R in hand and momentum, and it just crossed above the dragon once more and took out the hump of this RL10. So that's 7R plus momentum, new high of the day. I mean, why not? That's kind of a why not entry. Keeps going well. By this time, I have now just moved my stop up. So when we track this with the trailing stop, never even really tested. And at this point, I tighten it up because we're heading into the lunch. So instead of having the stop here, I just go ahead and lock in the gains on the fourth and final position, and then just leave it there. And then this is one where I cashed them all except one overnight swing position, which was paid for by, this is about a 10R win, 10 execution Rs, just right there. And that's if this red line was hit. And our exit on the intraday trade was better than that. So that's Simon Property Group. That was the least challenging trade that I can remember in the last couple weeks. And what I want to say about this one is that you've heard me talk about a negative position on a negative orientation on Simon Property Group and commercial real estate. I just don't believe long term they're in good shape there because of the change in the way retail space is going to be managed and commercial property, and I don't think there's going to be a lot of money to be made in that as an investment vehicle or as a somebody owning property to gather rent like a business to business. I'm on the web, dear. So what I really like about this one is that even though I have a long-term negative bias on it, the intraday trade doesn't really care about that. It follows the simple rules and just applies them. And the fact that I didn't believe in this thing meant I just decided to put the entry in, have that MMRB, and then just trail it and see what happens. So I wasn't trying to fine tune this too much, and that relaxed into the best trade of the day. In other trades, I might have been fiddling around with these RLXDs and trading a lot. I just let this one start with a MMRB and add positions as it just kept locking in gains. So sometimes less is more. Here's one. This was the first time that I've traded. That should read URTY, not IRTY. And this is the triple. Triple Russell 2000. And this again, I just want you to notice the peak of the RL10 and the bottom of the RL10, that it all found support at the VWAP. By this time, the market felt up because everything had gapped up and we're gaining. This one made a new high of the day, so I just gave it a try using the VWAP as the stop, which is, in this case, it was the VWAP, the PSAR, and the RL10 all together. That made it seem like a pretty reasonable stop. So this one, I just trailed it with that. It got up this far. It took out the Z3 excursion. So I put in a second position. Then it gave me an RLXD, so a loss on the second position. The first one paid for it. It gave me almost immediately after I got bottom ticked in here, the RLXD entry. So I put one back on with a risk at the PSAR, which was basically the same place I got out. This one gave me a up, down, and up. Took out the hump of the RL10. Everything was good in the market. The RL270 was strong. So second position, and then another bottom ticked RLXD exit, followed by a RLXD reentry. This was that nice second leg, the same one that we saw in UDOW. Everything was just working right here into and through the lunch, grinding north. And then I didn't try south, and then basically scratched the afternoon trade. So the captures on this one, the execution captures were in the green. So a plus, and a plus. And then it gave back this little bit of yellow here. And then otherwise, those were the levels of risk I was using. About 30 minutes before the close of the day, I was trying to make some decisions about the swing trades. And I was going through the speed run of the portfolio. And I decided to keep one swing position for each of those 4 trades that you saw because they were all dominant trades today. So I kept one swing position paid for by the market's money of those as a way to venture forward. And the reason for that was based on this quick look. So what I wanted to do was pull out if you look at the RL10 compared to that dragon making a nice smooth move upwards, I want you to notice that on both of these legs, the RL10 didn't come through the dragon. So this one, it didn't come through the dragon, and now was giving us a second day of quiet grinding northward movement. Today, it actually peaked above the RL10. And so on that basis, I looked at this pattern as leg 1, leg 2, and starting leg 3. And so I wanted to play that move and said, let me take the positions that earned money today and closed well and just keep one piece of the turbo trade as the core position. So this is the case where they started off as turbo intraday trades, and then I just kept the piece. In other times you've seen me where I had a core position in already, and then it was working during the day, so I added the turbo to an existing swing position. But none of these had swing positions on them. They started off as turbo trades, and then I decided on the basis of how it was closing with about 15 minutes left to retain that. This little primary trend, brief pullback, and then resumption. The reason that's a really powerful move is it's almost like summer, fall, summer when we're thinking about the MACD histogram. And we're postured almost ready to start the summer again. So keeping those positions, since they were relative strength leaders, maybe there will be some 1 day's worth of momentum. So that was the way I was betting it. When you look at it the other way, you see like a winter, spring, winter, this collapsing dragon here, that led to that massive downward sell. So you had like leg 1, pause, leg 2. I'm hoping that this is leg 1, pause, leg 2, pause, and then the start of leg 3 that'll take us up through fair value and maybe a little bit beyond. Okay, so that was the justification for holding on to one piece of each of those, and I posted about that already. Okay, just wanted to do some quick coaching feedback to some charts that were posted in the chat room from the guys today. This is Grant, and what I really like on this one was that he had taken the lesson about Caterpillar and the gap down in early reversals, that morning hook, and applied it to Caterpillar. And Caterpillar he picked because it had been a max pain range compression. So Caterpillar had closed here on Friday, had a gap down morning hook. It did a low, a high, pulled back, made a higher low, and so he bought the crossing of the dragon here. Bought it here with a tight stop, and then at the first hesitation and pullback, cashed probably an R right here, and he had worked this with a 1 minute and a 5 minute bar chart, and so what I wanted him to look at in CAT was the note that I gave him was, now that you've sort of got that initial position, once you've got that fish on the line and it's in play, you know it's in play because last week it was a big loser, and today was a big gap down, and then it already fought its way north in a strong move. So that feels like it's in play. So don't let it off the hook. And what I asked him to do was now start studying what happens after price reconsolidates and the Z3 lines pinch. And I circled all of those that are of interest. Here, 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 here. In 4 out of the 5 times, there was a significant directional move for about 10 bars. And then when you start adding to these little consolidations and breakout moves, look at the MACD histogram seasonality, and then see what you can see. So here's one where you had winter, spring, winter, and starting into the spring again and get ready to cross right into the summer. And now it breaks out of that Z3 pinch, and then you get the big afternoon move. So when you see Z3 pinches and you see it has improved and getting ready to cross into the summertime, that's a low risk idea for entry. Here's one where the Z3 pinch was coinciding with the fall and testing the winter. So that's one where, it was a decay. Now, there wasn't much of a failure in here. So you see the MACD lines clustered around 0. And now finally in the afternoon, after failure to fail, you have a super pinch once more. Notice you have the RL270, the RL90 have now joined the 10 and the 30. Everything is tightly compressed inside the river, and the Z3 lines have pinched as tightly as they were pinched all day. And now you have that range expansion. It breaks out to the upside in the summertime and got 2 legs up. Now that it is starting to unfold like the fingers of your hand spreading out, notice you're now starting to see the 10 and the 30 start to separate from the 90 and the 270. So you get range expansion and you get these RLs beginning to unpack. So nice work by Grant. And now by studying the game film, what I want them to, the immediate message is keep doing this. That's a low risk idea. Keep doing that. And now later on, start studying what happens in those periods of compression. Okay. So nice work there. Let me see if I get Joe's stuff up in here. Yeah, okay, so here's Joe's stuff. We're going to take a look at this was Grant's on the 5-minute. This is what that 5-minute chart looked like on Caterpillar. And now what I want you to notice, this shows kind of the rest of the day. And there was a considerable move after this period of congestion, which is where that 1-minute chart was over. And then there was a really nice second leg up. So you have 1 leg up, pause, 2 legs up, pause, 3 legs up. And so you see 1, plan for 2, hope for 3. And in this case, once you got that fish on the line and it has already put in 2 legs of a reversal, notice how the previous day there was a lot of buying pressure. The size of that leg in the afternoon was the size of this leg. So the Caterpillar is giving us some directional signals about where it wants to go. This was Joe on Disney. Nice second leg up, gets the RLXD, failure to fail, tight stop, RLXD, and PSAR exit. Beautiful reentry. Second position, RLXD exit pays for the day. Home Depot, this one felt, this is not bad, this short right here, because you're aiming for the VWAP. I love the stop and reverse. It just didn't follow through. And so that's not bad at all. Those are 2 fractional losses that were both postured well. I don't mind those at all. This one almost felt like he was in a hurry to try, though, because I know that he was seeing this and didn't get it, and maybe gripping the sword a little too tight. Virgin Galactic, the same thing. A big run up. This is kind of the reentry, and then an excellent scratch, and then probably frustration after missing this and then missing this. So the same logic that gets you in here should get you in down here as it's going to make the afternoon run. So I'm almost feeling a little frustration in there. This one, I like this entry. I like that second entry. Good exit, better reentry, get paid, good reentry. This is not good. This should be up in here because you want this trade to pay for these other one, to pay for this other one over here. This I think was just slow. That's the only micro improvement I'm making there, and that's about 25 cents, and that makes that a positive day instead of scratch day. So just relax. You need a firm but not death grip on the sword. You've got to have relaxed hands, a strong enough grip, and not a grip that is so strong that it paralyzes your flexibility. So just we got some work to do on there on relaxing. Okay. The last thing I want to cover today is just a quick review of the 5 patterns of the RLCO Generation 1. So a lot of times you'll hear this creeping into my language where I'm describing, hey, that's a P1 or that's a P3 or a P4 or something like that. And so these are documented in the RLCO BB framework. It's one of our info papers, and it has the text descriptions of these. But I just felt like for the visual learners out there that it might be helpful just to see the pattern that you're looking for, rendered into a flashcard or a snapshot, right? So 7 patterns of the RLCO framework. This is the generation 1. Generation 2 are the patterns that we're teaching in the hybrid course. So the generation 1 patterns are still valid, but I use them more as a description of what's going on. So I have a shorthand of like market, almost like a market classification or a status. So P1 is simply the regression line crossover. So what had to have happened was price, the RL10 and the RL30 all left the river upstream. So when the RL30 joins them, that's the beginning of trending behavior. And that trend is going to happen until price and the RL10 get back into the river. So before that can happen is the RL10 and the price are going to reverse direction, and then they're going to cross the slower RL30. So when that happens, the RL10 precisely crosses the RL30 outside the river. That is a P1. That's the second criteria of the owl, remember. So the first criteria was an unambiguous move, a large move. Second criteria was P1. The third criteria was when the RL10 crossed the dragon, wherever it may be. So what I want to just highlight here is when we talk about P1, that's what we mean. The RL10 has crossed the RL30. That's the first warning, really, that this thing is reverting back to the mean. So I've shown here the river, that's Z1 and Z minus 1, and then that red line in the middle is that Bollinger Band mean. That's Z0. The reversion to the mean trade comes from here, and then is going to fight its way back to the Bollinger Band mean. Now, pattern 2 and pattern 3 are both related to pattern 1 in the following sense. That when you had a P1 and that RL10 got through the Bollinger Band mean, pulled back and then resumed, you can see here that it held support at the Bollinger Band mean between Z0 and Z1. So when it makes the first leg pause and then resumes, wherever that belly of that RL10 is, if that stays north of the Bollinger Band mean, then that's a P2. That's a very favorable sign. And then it never surprises me that the second leg would be the same size as the first leg. So leg 1, pause, leg 2. So a P2 starts with a P1 and then holds support at the Bollinger Band mean and then resumes. So that's P2. A P3 is the same thing, only now it got out of the river, pulled back, and then held support outside of the river and then resumed. I want you to notice I put a little red P right there. By that, I mean the pocket. When you see this up, pull back, and resume, until it gets above the crest of that, the price is in that pocket. That's what I mean by a pocket entry or a pocket re-entry or pocket continuation. So the difference between the P2 and the P3, well, what makes them the same is that they both started with a P1 and then they were successful. And P2 held support above the Bollinger Band main in the river. P3 found support north of the river. Okay. Now P4 is what is a relaxed form of this lazy W. It doesn't matter where it was with respect to the river or not. It didn't have to start with a P1. But what you notice is you see a leg, a pause, and a resumption. And you see that little pocket inside there. So you note where the RL10 made its lowest low. So that's a low in the RL10. Then it made a leg up, made a pullback, and then resumed again. So you got that second pocket. So you have a pocket, leg, pause, pocket. Now when you have two higher lows, you have a low and a higher low. That is a P4. Any higher low continuation. So it's this second pocket right in here. And that's essentially the lazy W. Now a special form of this is when you add the dragon to this. I just want to zoom in on this because you see me doing this quite a bit. Oops, sorry. Yeah, so this is at a pocket and the second pocket. So now what I've done is I've added that orange dragon for you to see. So let's suppose that you had some swing low down here where the dragon or the RL10 had rolled over and then this leg started up. So you had a low, and here's your higher low that we're going to look at. The fine tuning on this consists of the RL10 crosses over, and now you've got like this RLXD, and that's usually a pretty good exit. Now, that preserves all of the gains that you made in case this thing is going to run all the way down to the Bollinger Band mean or wherever that previous low was. But if you see a nice leg and you took the exit and then this quickly, the RL10 quickly finds a bottom and then crosses over this dragon again, this could happen fast, like in 2, 3, or 4 bars. This space between the hump of the dragon and the belly of the dragon is the region of the pocket. If you were to draw a line across from the hump of the dragon and you waited to buy up in here, then you would have technically an emerging dragon. But my argument would be that the smaller this move is and immediately reverses above, I don't mind exiting and then re-entering right away. The only thing that can happen here is this is like the second breakdown. So if you had a nice leg, it crosses the RLXD, let's say you exit, and then it quickly reverses up. Now let's suppose that instead of it progressing all the way through the pocket and becomes an emerging dragon and beyond, that this thing goes up, pause, and then fails right away. The second time it crosses through the dragon, this run is done. And then this becomes a very good collapsing dragon. And so the second failure at the dragon is enough for me to adopt a short side bias. It's rare for me to take this immediately as a short, especially if this was a really strong move on 1 minute charts. I'm not ready to just immediately reverse this on 1 minute charts. But the second time this were to fail, that's a really good symbol or good sign for a collapsing dragon. Okay. What you would have seen is that the RL10 rolls over and then you would have a high and a lower high, and now it feels like that whole collection has rolled over to the downside. So this is a special form of the P4. Any higher low continuation, so a low, a higher low, and I like buying it or resuming here, re-entering, or adding on that second pocket. And then I'm front running this, when I enter in here, I'm front running this emerging dragon entry. I'd like to capture this move. Okay? So that's what we mean by the P4. Okay, back to our regularly scheduled program here. So let's come over to the P5. So the P5 is really where all of that sideways quiet channel stuff comes from. Okay. Try to zoom in just a little more. Okay, so what I want you to notice on this one is I want you to start with the default position that you need to see 10 bars of essentially sideways quiet channel. By the time you get 10 bars that are sideways, what you're going to notice is that'll jump out at you like, oh yeah, this is like railroad tracks. And it will most likely be clustered around the middle of that river, which is the Bollinger Band mean. And you'll see the RL10 and the RL30 swirling around in here, but everything is all tightly compressed. Usually, by that time, you will notice the Z3 lines starting to collapse. So this is a sideways quiet channel. What I normally need to see on this is a breakout above Z2 to get into that. Now, if it doesn't break out, and this price action continues to go sideways, what will happen is at some point you see how tightly compressed they are and you draw a frog box. And then you notice that the Z3 lines have now compressed and are inside of the frog box. This is a very tight pinch because the frog box is the definition of the difference between signal and noise. So this is all noise. And when you get 6 standard deviations of the intraday is all compressed in here, you'll see price and now the Z3 lines in here. This is a Z3P. And as I briefed yesterday, that's a special form of the sideways quiet channel. Now you can play the breakout out of the Z3. Instead, down here you could break out of the Z2. Here you want to wait for it to break out of the Z3 and then use the far side of the Z3 as your trailing stop. And this is bidirectional, so you can work in either direction. So you are in a Z3P when the RL10 and the 30 and price is all tightly compressed sideways, and then the Z3 lines are all contained inside one frog box. It's not unusual or not unheard of to see this get to be the size of half a frog box. Then you have a really tightly compressed Z3 pinch. And again, you're waiting for a Z3 trigger breakout. Now, if this lasts for a while, you'll have a super pinch. I thought I'd labeled it. Sorry, that should read super pinch. So the super pinch happens when all of this stuff has compressed inside that frog box, and now you also get the RL10, the 30, the 90, and the 270. All 4 of those regression lines and the Z3 lines are all tightly compressed inside one frog box. This is like a radioactive acorn ready to just break out. And again, the Z3 breakout is what you want, and trail it with the far side Z3. And then what I will do is stop and reverse this thing. So if it breaks out to the upside, 1, 2, 3 bars up, and then starts to reverse, I will scratch this and then go short when it re-enters the Z3 and then play to the far side, because a lot of times you'll see breakout, reverse, and then big move the other direction. That second leg, that second move is often the big move. But the first move works often enough that you can get paid, and it might just go ahead and break out and never look back. But once I'm in the money and I can get to no lose plus dinner for 2, then I'm going to try to at least scratch this or make a little bit of bank, and then stop and reverse here, play to the far side, and then beyond. And I'll do that twice. So that's some advanced technique there. The next one, number 6, is a contribution from Kim Anderson. And she developed this as part of adapting the RLCO framework to her own trading. And so we call this P6, we call this the Anderson regression line stretch. And so what she noticed was that a lot of times, especially if you started with a Z3 pinch or SQC or that super pinch, a lot of times what you would get is this first breakaway, runaway move from the pack. You would get this parabolic move that would get you past Z3 and beyond. And then there would be nothing left. And it would just collapse and come all the way back to what was the Bollinger Band mean, which only slightly moved in this short period of time. So what she wanted to do was what to do when she saw evidence of this thing failing. What she would do is take she would get short when this thing was beyond Z3 and it reverses. She would short the RL10 and cash the RL30. I've shown it. It wouldn't be surprising if that was near Z2 and Z1 by this time. When price and the RL10 make that move out, price can even pull away from the RL10. And then what she was doing was short the RL10 and then cover at the RL30. And then a lot of times this thing would come all the way up. So she was trying to get that middle piece. I noticed that this was so often near the Z2 and the Z1, the Z3, Z2, and Z1 lines, that I abstracted this into what I call now the P7 or the Z ladder. And what I like to do is just trade from Z minus 2 to Z plus 2. And I find that it works better after a sell-off and then a reversion than it is from a runaway upside and then a failure, because I just think there's too many people that want to chase, and that when they see that first leg that there's a lot of people trying to buy the dip. More so, I would rather wait to see the fearful move. So there's two forms of this. One of them might be in the same way that you saw this big breakdown. Maybe this thing got beyond Z3, so that for me is the alert, ready, and then it reverses when it crosses back inside the Z minus 3. So this is ready, set, and then go. Then I get long at Z2 with my execution stop at Z3, and then I just trail that as far as it wants to go. My target, my 2R target on this one, my 2 execution risks, is just back to the Bollinger Band mean, which is at Z0. So this little space in here is the river, and I suppose I could draw that if I wanted to make that a little easier to see. Let me try it this way and see if we can improve this a little bit. If I just said that was the river. And then something like, and if we called this little space in here, the space from Z2 to Z1, is the speculation zone. So we had the big sell-off, ready, set, go. If I can get back into the river, I should be at no lose plus dinner for 2. By this time, my stop should be something like, if I'm trailing it, by the time it enters the river, my stop would have moved from here at the entry by the time it gets into the river, my stop would have been at least to here. That's break even, so I would like to be just a little bit above so that I get to no lose plus dinner for 2. What I'd really like to see is this thing get, all the way to the Bollinger Band mean and beyond. This is the edge of the river, and that's the far side Z2. So what I really want to do is kind of make a living from Z2 all the way to Z2. Because if it fell off this far, it wouldn't surprise me if it overshot that far. So you'll see this thing acting like a bouncing ball in this kind of channel as it goes through life. If on net this is directional, you'll see that that river won't be flat. It'll tilt in the direction of the much longer term trend line, and then you'll see it kind of oscillating as it goes. But really, I like to trade from Z2 to Z2. And so P7 for me is just a relaxed way of seeing, especially after a Z3 excursion, ready, set, long, no lose plus dinner for 2-hour battle drill, and then see how much I can catch. That would be nice. The second form of this is if it gets let me get my stop out of there. If this thing crosses the Bollinger Band mean, leaves the river, gets out past the floodplain, and then immediately versus, to me, that's kind of ready, set, go. And then I can trade maybe from, the two choices are wait for it to get into the river, but now your move, it may already be gone. So if you're going to ready, go, if you get long here, your stop is still going to be at 1Z away. And then as soon as you can, again, by the time this gets up to re-enter the river, by the time that thing re-enters the river, then you want your stop up in here. Okay. And then this is where you get that that thing we talked before. You'll often see these kinds of moves with these a higher low, a higher low, as that thing crawls out of the basement over here, and it'll a lot of times start making these little intermediate moves, and you start seeing a series of higher lows, and it never really cleanly gives you any other pattern. That's what that P4 can kind of do for you. And then at that time, what you're really looking for is anytime that you see these P2s and P3s, anytime you see it, it has, it made a reversal outside the river, and now it makes this higher low above the Bollinger Band mean and is taken off. That's a low risk entry, because if this thing really works, this river is going to turn and start to follow, and now you got a pretty good relaxed entry. And then the same thing over here when it's already outside of the river and makes the pocket and goes. These are not as frequent as these. So if you see a P3, man, this thing is really ready to go. It didn't even come back to the Bollinger Band mean. It found support outside the river, and they just came in and piled on. So that's one you either got to get the pocket, or you might end up getting the emerging dragon on that one. Okay, so those were the specials that I wanted to cover. I uploaded this as a flash card on Patreon for you, so you can kind of take a look at that. And that's a one-page visual representation of all the things that are in that. It's about a 6 or 7 page text document. I find it easier to remember using the visual cues, and I'm a visual trader intraday, so those are the patterns I'm looking for. But you'll also see those exact same patterns on the swing trades, on hourly, 2-hourly, daily, and weekly. It's the same patterns, and that's a relaxed way to see what's going on. What you'll see is that after big sell-offs like we've just had, that quite often you'll see this kind of P7 thing happening. And then when you see the dragon turn and the MACD history, I don't even show the MACD 4 seasons on here, but you could imagine if you had one of these patterns and then you looked down below and you saw the MACD histogram and looked at the seasonality, that seasonality of MACD histogram is used in combination with this is going to be very helpful for you. Okay, so maybe I'll talk about that one tomorrow. We'll see how it goes. Okay, so that's everything I wanted to cover. Thanks for hanging in there. Sorry we're a little bit late, but hang in there. Let's be ready for a second day of momentum tomorrow, but we'll be mindful of the other side of the trade and what can go wrong, right? So remember, we're still in bullish normal conditions, and we're right on the boundary between summer and fall. If it starts getting selling, then we're concerned more about capital preservation than we are trying to make maximum gains. Okay, so take good care, and we will see you tomorrow.